All right, in this lesson, we are going to talk about cash and how we report them. This lesson here is more about understanding cash. So some people would say, why don't you put this at the front of the lesson? But at the end of the day, this is all about reporting. So reporting is kind of one of those things that we talk about at the very end, because that's the last thing that we actually do. We have to do things before we actually report them. So if you're kind of going through this and going, man, this should have been like up at the front, probably, but it's not. So let's talk a little bit about how we report cash. So cash is an asset, as we've said before, and therefore it is reported on the balance sheet. So it's not reported on the income statement, but it is reported on the balance sheet as well as the statement of cash flows, but we won't get to that here. The question really is, what is cash? And I know that's kind of a dumb question. What is cash? But that is an important question to understand, because what cash is to us may not necessarily be cash to someone else. And when we think about currency, that is a form of cash, but there might be something else that from a financial standpoint we consider cash. So what is cash? Well, cash is anything that is that can be deposited into a bank. So it's not just coins and currency, but it also includes check. So the way that I like to think about it is whatever a bank will take for a deposit would be considered cash. What else? Petty cash on hand. So we're going to talk about petty cash in another lesson, but petty cash is also cash. Why? Because petty cash usually is currency, okay, or change, okay? So it is cash. And the last one is what we call cash equivalent. And this one's a little bit different. It's not necessarily currency or coins, but cash equivalent from a financial statement standpoint is included in the definition of cash. So let's start with that. What is a cash equivalent? Well, a cash equivalent means all short-term, highly liquid investments purchased within 3 months of maturity. The key word here is that it was purchased within 3 months of maturity. It doesn't include highly liquid investments that you purchase that have a maturity date of 1 year, but today we are now within 3 months of its maturity date. It does not include those type of investments. So when you purchase the investments, they must have an original maturity date of 3 months or less. Now, what's the reasoning for including this in cash? Well, the reasoning is that it's so close to cash. When we think about the life cycle of a financial statement, it's so close to cash that it literally is cash. Now, I know that's a stretch to say, but it is literally cash. So therefore, we're going to include it in cash. Now, something in auditing that you would learn is that we have something called materiality. And the main, I think one of the reasons why we include it with cash is because from a materiality standpoint, it's not going to make a huge difference if we include it with cash or not include it with cash. Now, one thing to note about cash, it does not include something called restricted cash. Restricted cash is cash set aside for a specific purpose, which is not available for day-to-day operations. And it can literally be legally restricted or contractually restricted. So if it's restricted and cannot be used for day-to-day operations, then it cannot be included in the definition of cash. So let me give you two scenarios of this. Let's say you take out a loan and the bank says you need to deposit a security deposit of $25,000 into the savings account that you cannot touch while you have this loan out. So in a sense, the bank is restricting $25,000 of cash into a bank account because they are giving you a loan, a collateral basically. And so because the bank has restricted that $25,000, you can't just pull it out and use it for your operations. that is considered restricted cash, and you can't include it in the amount of cash you have. Now, you will have a different account name for it. Maybe it's called restricted cash. So you debit restricted cash, for instance. So you would have cash, and then right below it, accounts receivable, and then you have restricted cash. That's okay. You're gonna show it on your balance sheet. You just can't include this in the definition of cash or the balance of cash on your financial statements, okay? The other situation is maybe you are thinking of buying or building a new facility. So the board of directors restricts $5 million for the building of that facility. Well, that $5 million is now restricted and cannot be used for day-to-day operations because it has been set aside to pay for this building that you are about to build or in the middle of building. So because of that, that becomes restricted cash and cannot be included in the definition of cash because you can't use it for day-to-day operations of your business. So key things here when we talk about restricted cash. So that's how we report cash. Basically, cash includes anything that a bank would accept for deposit. It also includes petty cash, and then it also includes short-term, highly liquid, marketable securities. It doesn't include restricted cash. So that's a look at what we would report on the cash line item of the balance sheet. So I hope you enjoyed this lesson, and we'll see you in the next lesson where we're going to talk a little bit more about this idea of petty cash. Hey guys, it is Patrick. Don't forget to press the like button and share this video with someone who could get a lot of use from watching this lesson, like maybe a classmate or maybe a friend or maybe just a parent, just because you wanted to share this video because you're very excited about what you saw. Share it with someone. And if you want to help us grow and help us make sure that we put the very best in accounting topics out on YouTube, make sure you press the subscribe button and turn on that notification bell. That way you're alerted every time we post videos to this channel. Now, I do this with every one of my classes at the end of class. What did you learn from this lesson? Put that in the comment section below, and I'll respond to you on what you got out of this video. So hope you enjoyed this video, and we will see you in the next lesson.